It doesn't matter how smart you are, how advanced your strategy is, or how perfectly you read the charts. If you ignore this one rule, the market will take everything from you. 90% of traders already learned this the hard way, and most of them didn't even realize what they broke until their accounts were gone. Every blown account starts with the same mistake. Not a bad entry, not a failed strategy, but a trader ignoring one simple rule. The rule that separates survival from ruin. The crazy part? 90% of traders know this rule exists, yet they ignore it anyway. And it's the same reason they keep repeating the cycle: deposit, trade, blow up, repeat. Today, I'm going to expose this one risk rule, why most traders overlook it, and how mastering it could mean the difference between being in the 90% who lose or the 10% who last. But before we dive in, let me pause and ask you something. Where are you watching this from? Drop it in the comments below. I love seeing traders from every corner of the world, whether you're in London, New York, Dubai, Lagos, or Sydney. And while you're at it, hit that subscribe button, tap the like, and share this video with one trader you know is struggling. This channel is called Trading Psychology Lab, where the market meets the mind. And what you're about to hear may sting, but it could save your trading career. So let's ask the real question. Why do traders blow up? It's not because they can't read charts. You can learn candlestick formations in one afternoon. It's not because they don't know strategies. Thousands of free strategies are just a Google search away. And it's not because they can't predict direction, because here's the secret. Even the best traders in history were wrong half the time. The truth is, traders blow up because they ignore the one principle designed to protect them when everything else fails: risk per trade. Now, I know what you're thinking. I've heard this before. But let me challenge you. If you really lived by risk management, would you still be risking 10% of your account on one setup? Would you still double down after a loss? Would you still let emotions convince you that this time is different? Knowing a rule in theory is easy. Living it when the market tempts you, that's where most fail. Imagine this. You've got a $5,000 account. You've been waiting all week for the perfect setup. The chart is screaming opportunity. You tell yourself, this is it. This is the one. Instead of risking $50, just 1%, you risk $500. After all, if it wins, you'll finally see a big leap forward. But the market doesn't care about your hopes. It fakes you out, runs your stop, and in one move, you're down 10%. Do that a few more times, and your account is bleeding to death. That's how traders blow up. Not because they don't know better, but because they ignore the very rule that guarantees survival. And why do they ignore it? Not stupidity. Not ignorance. Psychology. The human brain is wired for short-term reward. When you see a setup that looks like a jackpot, dopamine floods your system. It's intoxicating. You convince yourself that this is the trade that changes everything. And even worse, when you're losing, your brain whispers the most dangerous lie in trading. Just risk more and win it back. This is why intelligent, educated traders blow up accounts. It's not lack of knowledge, it's emotion overriding logic. And here's the cruel part. Ignoring the rule feels good. It feels bold. It feels decisive. It feels like you're taking control. But the market is merciless. The second you overexpose yourself, it will punish you. And the lesson will not be gentle. Look at the legends. Paul Tudor Jones, Richard Dennis, Jesse Livermore. Different styles, different philosophies, different markets. But every single one of them lived by one commandment: protect your capital first. Paul Tudor Jones once said, "Don't focus on making money, focus on protecting what you have." And that begins with one thing: never risking more than a small, controlled percentage of your account per trade. Do the math. Risk 10% per trade, and just 5 losses in a row will cut your account in half. 5. That's it. And losing streaks aren't rare, they're guaranteed. Even world-class traders face them. When you ignore the rule, you're walking into battle without armor. It's not a matter of if you'll get hit, it's when. But here's the paradox. When you finally accept and obey the rule, trading gets easier. Why? Because you know no single trade can destroy you. Imagine placing trades without fear. Imagine no longer flinching at every tick. Imagine calmly walking away from the screen because you know your risk is capped. That's what happens when you stop ignoring the rule. Limiting your downside unlocks your freedom. Still, most traders will continue to ignore it. Why? Because they're not really after consistent profits. They're after excitement. They're addicted to the thrill. And until you decide that survival matters more than stimulation, the market will keep punishing you. So here's my challenge. Be brutally honest with yourself. Are you risking less than 2% per trade? Or are you secretly playing with fire, telling yourself you'll tighten up later? Until you confront this truth, no strategy in the world will save you. Because this isn't about entries or systems. It's about discipline. And in the next section, we're going to go even deeper into the psychology of why traders sabotage themselves, even when they know the rule. You'll see how your brain tricks you, how your emotions hijack your discipline, and how to build a mental framework strong enough to resist self-destruction. So stick with me, because mastering this will put you in the minority of traders who actually last. And hey, before we continue, take a second. Hit that subscribe button, smash the like, drop a comment with where you're watching from, and share this with another trader who needs this wake-up call. Trust me, they'll thank you for it. Most traders don't realize that the enemy isn't the market. The market is just numbers on a screen, moving up and down. The real enemy lives inside you, your own psychology. Because here's the paradox. Even when you know the risk rule, even when you've promised yourself you'll follow it, something inside pulls you away. You sabotage yourself. You know the math, but you don't obey it. Why? Let's break this down. When you enter a trade, your brain lights up the same pathways as when a gambler pulls a slot machine lever. It's dopamine-driven anticipation. The possibility of reward makes your heart beat faster. And in that heightened state, logic collapses. The prefrontal cortex, the rational part of your brain, gets overridden by the amygdala, the emotional center. Suddenly, instead of thinking about long-term survival, you're consumed with short-term payoff. This is why traders oversize. This is why they ignore risk. It's not lack of knowledge, it's brain chemistry. Think back to the last time you had a perfect setup. The chart aligned, the pattern looked textbook. Did you risk more than you should have? Did you tell yourself, this one is different? That's not you making a calculated decision. That's your brain, high on dopamine, convincing you to bend the rules. And the market, cold, indifferent, merciless, doesn't care about your emotional high. It punishes overconfidence. This is why trading is so brutally hard. You're not battling other traders. You're battling yourself. And until you learn how to master that inner battle, no strategy will save you. Let me illustrate this with a story. A trader named John had studied for years. He knew his setups, his strategies, his indicators. But every time he built an account, he blew it up. Why? Because in the heat of the moment, he always sized too big. One night, he confessed to his mentor, "I don't know what's wrong with me. I know the rules. I know I shouldn't risk more than 2%. But when I see that setup, I feel like I can't help myself." The mentor looked him in the eye and said, "John, your problem isn't technical. It's psychological. You're addicted to the feeling of risk. Until you learn to control that, the market will keep teaching you the same painful lesson." And he was right, because risk management is not about math, it's about discipline. So how do you rewire yourself to respect the rule? The first step is awareness. Understand that the urge to oversize is not you making a bold choice. It's your brain trying to hijack you. And like any addiction, the only solution is strict rules and accountability. Professional traders use what I call pre-commitment. Before they enter a trade, they've already decided the maximum they're willing to lose. And they write it down. They don't leave it up to emotion in the heat of the moment. They set their position size before they even press the button. Why? Because once the dopamine kicks in, it's too late to negotiate with yourself. You can't rely on willpower in the moment. You must automate your discipline before the temptation arrives. Think of it like a fire escape plan. You don't wait for your house to be burning before you decide where the exits are. You plan ahead, so when panic strikes, you know exactly what to do. In trading, your fire escape is your risk rule. If you don't set it before the trade, your emotions will trap you inside the flames. But here's the deeper problem. Most traders secretly don't want to follow the rule. Because following it feels boring. It feels slow. It feels like you'll never reach your goals. Risking 1% at a time feels like crawling when you want to sprint. And that impatience is why 90% of traders never make it. They can't endure the slow path, so they gamble on the fast path, and the market eats them alive. This is where you must decide what you want more, excitement or survival. If you want thrills, go to a casino. But if you want to build a career, respect the rule. Because the boring path is the one that leads to freedom. Now let's talk about the illusion of control. When traders ignore the risk rule, it's usually because they believe they can control the outcome. They think, This setup is too good to fail. They believe their knowledge, their backtesting, their intuition gives them an edge so strong that the normal rules don't apply. But that's the trap. The market doesn't care about your confidence. The market doesn't care about your research. Even the best setups fail. Even the strongest edges hit losing streaks. When you ignore the rule, you're basically saying, I'm above randomness. And that's the exact arrogance the market punishes. So how do you humble yourself? By remembering this, trading is not about being right. It's about surviving when you're wrong. Because you will be wrong a lot. And your account must be built to withstand those wrongs. Think of professional poker players. They don't go all in on every hand. They manage their chips carefully because they know variance is real. Even with skill, you can't win every hand. Trading is the same. If you go all in, you won't last long enough to benefit from your skill. Risk management is your longevity plan. And here's the kicker. Once you master risk, the market changes for you. Suddenly, you're no longer terrified of losing. You accept it. You even embrace it. Why? Because losing no longer threatens your survival. You know that a loss is just a small fraction of your capital. And when you remove fear, you trade with clarity. That's when you start making better decisions. That's when you actually give your strategy room to play out. But if you don't master this, every loss will feel like a stab in the chest. Every trade will feel like life or death. And that emotional volatility will sabotage you again and again. So here's the truth. Risk management isn't just about protecting your money. It's about protecting your mind. Because once your mind is free from the fear of ruin, you can actually focus on the process. You can actually grow. And that's why in the next part, we'll go even deeper. We'll explore the lies your brain tells you, the dangerous shortcuts that seduce traders, and the step-by-step system you can use to build unshakable discipline. Before we go on, take a quick moment, smash that like button, drop a comment with where you're tuning in from, and if you haven't yet, hit that subscribe. This isn't just another trading channel. This is the Trading Psychology Lab, and here, we're rewiring the way you think about markets. The most dangerous lies in trading aren't the ones you hear from gurus online or the ones whispered in chat rooms. The most dangerous lies are the ones you tell yourself. Because every trader, no matter how experienced, falls victim to self-deception. It's these inner lies that make you break the risk rule, even when you swore you'd never do it again. So let's expose them. Lie number 1. This setup is different. How many times have you looked at a chart, convinced yourself it was a can't-miss opportunity, and then sized up way too big? You told yourself it wasn't like the others, that this one was special. But here's the reality. The market doesn't care about your conviction. A setup with a 70% win rate still fails 3 out of 10 times. And if you ignore the risk rule on the wrong trade, you could erase weeks of gains in a single moment. This is the lie of exception, the belief that the rules don't apply to this one situation. And it's poison. Lie number 2. I'll tighten up later. Traders tell themselves this after breaking their rule once or twice. Okay, I oversize now, but I'll get disciplined after this trade. But discipline doesn't work like that. Habits don't start later. They start now. Every time you break the rule, you reinforce the identity of someone who bends under pressure. And the market will keep exploiting that weakness until you either break the cycle or it breaks you. Lie number 3. I'll get it all back in the next trade. This is the gambler's fallacy, the revenge trader's anthem. After a loss, your brain tells you that the fastest way to erase the pain is to risk more on the next setup. But this is how small losses turn into account-ending disasters. When you trade to recover, you're no longer trading your system. You're trading your emotions. And emotions make terrible strategies. Lie number 4. I can handle more risk than most people. This one is subtle. Traders convince themselves that because they're smarter, tougher, or more experienced, they can risk bigger percentages without blowing up. But mathematics doesn't care about your confidence. The probabilities are the same for everyone. If you risk too much, variance will catch you. This lie is the ego's way of convincing you that you're invincible. And it's usually the last thought a trader has before a margin call. And finally, lie number 5. I'll stop once I hit my target. This is where traders set a goal, say, doubling their account. They tell themselves, I'll take risks now, but once I get there, I'll slow down. The problem? That day never comes. Because the moment you reach your goal, greed whispers, why stop now? Just one more push. And eventually, the house takes it all back. These lies are powerful because they're comforting. They justify our worst impulses. They make us feel in control when we're actually sabotaging ourselves. And until you shine a light on them, they'll keep pulling you away from discipline. So how do you fight back? The first step is to change your identity. Most traders think discipline is about forcing yourself to follow rules. But that's like holding your breath underwater. You can only do it for so long before you give in. Real discipline comes from identity. If you see yourself as a trader who takes risk management seriously, you don't have to fight urges. They don't even feel like options. The rules become who you are. Think of it like this. If you see yourself as a healthy person, you don't sit there battling over whether or not to eat fast food every day. It doesn't align with who you are. The same must happen in trading. You must decide, I am the kind of trader who never risks more than 1 to 2% on a single trade. And then you live that identity until it becomes automatic. But identity takes practice. So here's a powerful technique. Create rituals that reinforce your discipline. For example, before every trade, write down your risk in dollar terms. Not percentages, dollars. If you're risking $50, write, I accept losing $50 on this trade. The act of writing it down forces your brain to acknowledge the risk, instead of fantasizing only about the reward. Over time, this rewires your relationship with losses. They stop feeling like failures and start feeling like the cost of doing business. Another technique is what I call pre-loss visualization. Before you even enter a trade, imagine it hitting your stop. Feel the disappointment. Accept it. And then remind yourself, even if I lose, my account will survive. I'll still be here tomorrow. By rehearsing the loss mentally, you strip it of its power. When it happens in real life, it won't trigger panic. It will feel familiar. Professional athletes do this all the time. A basketball player visualizes missing shots before the game, so when it happens, they don't spiral emotionally. They reset and keep playing. Traders must do the same. Because trading isn't about avoiding losses, it's about managing them. Now, here's where it gets even deeper. The lies your brain tells you aren't random. They're survival mechanisms. Your brain evolved to avoid pain and seek pleasure. In trading, that means avoiding the pain of a loss and chasing the pleasure of a win. But here's the paradox. What keeps you safe in nature kills you in markets. In the wild, doubling down on a food source makes sense. In trading, doubling down after a loss is suicide. That's why trading feels so unnatural. You're fighting against millions of years of evolutionary wiring. And this is why only a small percentage succeed. Because to master trading, you must reprogram your instincts. You must learn to love small losses, to accept boredom, to crave discipline. You must become what most people cannot, a thinker who thrives where emotions would normally destroy. This is the real edge. Strategies change. Markets evolve. But discipline? That never goes out of style. So ask yourself, are you still listening to your inner lies? Are you still convincing yourself that the rules don't apply to you, or that you'll get disciplined later? Or are you ready to draw a line in the sand and say, from now on, I am a risk manager first, a trader second? Because until you make that decision, the cycle will repeat. Again and again. And in the next part, we'll go even deeper. I'll show you the exact step-by-step system professionals use to build unshakable discipline. The mental frameworks, the routines, the safeguards that keep them consistent even when emotions scream for them to break the rules. This is where theory turns into practice. But before we move forward, do me a favor. If you're getting value from this, hit that like button, drop a comment with where you're watching from, and make sure you're subscribed so you don't miss the rest of this series. Share this with one trader you know who keeps blowing up accounts. They need this more than they realize. And this is where the tragedy deepens, because most traders never actually learn the lesson. They experience the pain, they blow up, they walk away bitter and broken, but they never truly understand the why. They think it was a bad streak, bad timing, maybe even bad luck. They blame the market. They blame the news. They blame algorithms, brokers, or manipulation. But the truth? The truth is that the market was just doing what it always does, testing every assumption, stretching every emotion, exposing every weakness. And the weakness it always finds first is the same one we've been talking about, ignoring the one rule that protects everything: risk. Here's the paradox. You don't need to be the best analyst in the world to make money trading. You don't even need to be right more than half the time. There are traders who are profitable being wrong 70% of the time. Think about that for a second. Losing more often than winning, but still building accounts consistently. How? Because their entire game is built around survival. They respect the one rule. They understand that staying in the game is more important than winning today. This is the point where most new traders roll their eyes. They don't want to hear about survival. They want victory, profits, freedom. They want the rush of winning big. They want the lifestyle images they've been sold. Screens lighting up with green candles, celebratory screenshots, trading from beaches and penthouses. And that's exactly why the 90% number never changes. The majority are addicted to the fantasy of winning, while the minority are obsessed with the discipline of not losing everything. The irony? The minority who focus on survival end up experiencing the lifestyle the majority are chasing. Because when you protect the downside, the upside eventually takes care of itself. When you guard your capital, you buy yourself time. Time to let strategies play out. Time to weather bad streaks. Time to learn without paying the ultimate price. And time, in trading, is the greatest advantage anyone can own. Think of risk like oxygen. Nobody notices oxygen when it's abundant. You breathe, you move, you live without thinking about it. But the moment oxygen runs out, it doesn't matter how strong, rich, or intelligent you are, you're finished. Risk is the same. Ignore it, and eventually you suffocate. Respect it, and you can breathe freely in markets where others are gasping for air. This is why seasoned traders often sound like they're repeating cliches. Cut your losses quickly. Don't risk more than you can afford to lose. Preserve capital first, profits second. They sound boring. They sound simple. But those cliches are the voice of scars earned over decades. Every one of those rules was written in blood, the blood of accounts that ignored them. But let's get practical. What does it actually mean to respect risk in a way that sets you apart from the 90%? First, it means defining your maximum pain point before the trade, not during. Because once you're in a trade, your emotions rewrite the rules. You'll move stops. You'll justify holding a loser. You'll pray for reversals. But if you lock in your risk before you enter, you cut emotion out of the decision. Second, it means position sizing like a professional, not a gambler. Professionals scale risk to account size. If they have a $100,000 account, they're not risking $10,000 on a single trade. They're risking $1,000 or maybe even less. Meanwhile, the retail trader with $5,000 is throwing half of it into one position, hoping to double it quickly. But here's the cold truth. The professional will survive 100 trades, even if half go against him. The retail gambler will blow up in 5. Third, respecting risk means embracing boredom. The trades that follow the rulebook aren't flashy. They don't give you adrenaline. They don't make you feel like a genius. They're quiet, calculated, almost dull. That's why most traders don't follow them. They're addicted to the drama of markets. But boredom is where consistency lives. If your trading feels thrilling every day, chances are you're doing it wrong. And here's the twist. When you finally accept the rule, when you finally build your trading identity around it, you begin to notice something strange. The markets stop feeling like war. They start feeling like probabilities. A losing trade doesn't cut deep anymore. It's just part of the cost of playing. A winning trade doesn't make you euphoric either. It's just part of the math. You start detaching. You start thinking like the house in a casino, not the gambler at the table. And the house never panics. The house never chases. The house knows the game is built in its favor if it just keeps playing. This is where true confidence comes from. Not believing you'll win every trade, but knowing you can't be destroyed by a single loss. That's the unshakable foundation. And once you taste that, you'll never go back to reckless gambling disguised as trading. But here's what's fascinating. Even with all the logic, even with all the proof, most traders still won't follow the rule. They'll hear it, nod, maybe even write it down. And then the next time the market dangles the temptation of a sure thing, they'll throw caution away. Why? Because risk management isn't just math, it's psychology. It's discipline against your own impulses. It's the hardest rule to obey, because obeying it means denying your ego the rush it craves. And that brings us to the final layer of this truth. The 90% don't fail because they lack intelligence. They fail because they refuse humility. Respecting risk is humbling. It's admitting that you're not in control of markets, only in control of yourself. It's admitting you can be wrong over and over again and still survive. And most traders would rather cling to ego than face that humility. But ego doesn't last in trading. Humility does. So ask yourself right now, are you trading with oxygen, or are you slowly suffocating without realizing it? Because the market doesn't warn you before it cuts the supply. One day, you just wake up and the account is gone. And the worst part is realizing it could have been avoided with one simple rule you already knew, but chose to ignore. By this point in the video, if you're still here, it means you're not like the average trader. You're the kind of person willing to hear uncomfortable truths, willing to face your own weaknesses, willing to do what 90% won't. And that already puts you ahead of the curve. So if this is resonating with you, do me a favor. Hit the like button so more traders wake up to this message. Drop a comment below telling me where you're watching from. I love seeing traders from all over the world connecting in this journey. And if you haven't already, subscribe to the channel, because in the final part of this video, I'm going to show you exactly how to implement this one rule in your trading, step by step. Not theory, not vague advice, practical, actionable methods to build a trading approach that actually lasts. And now we've arrived at the place where everything comes together. We've talked about the danger. We've talked about the psychology. We've seen why 90% of traders fail, not because they're unintelligent, not because they're incapable, but because they ignore the simplest, most brutal truth about trading. Risk isn't optional. It's survival. But awareness alone won't save you. You can't just know the rule. You have to live it, day in, day out, trade after trade. And that's where the real transformation happens. Not when you understand the principle, but when you build it into your trading as a permanent habit. So how do you actually do that? How do you shift from being part of the 90% to joining the rare few who survive and thrive? Let's break it down. First, you need a non-negotiable rule about position sizing. Too many traders calculate position size after they've already fallen in love with a setup. That's when bias creeps in. You need to reverse it. Before you ever look at a chart, know this. What's the maximum you're willing to lose on any single trade? 1%, 2%, maybe 0.5% if you're conservative. Whatever your number, that's your oxygen tank. That's the line between survival and suffocation. Let's make it practical. If your account is $10,000 and your maximum risk is 1% per trade, that means you can lose $100 on any one position, no more. That $100 defines how many shares you can take, how tight your stop must be, or whether the trade is even worth entering. Suddenly, every trade is filtered through survival first. And when survival is guaranteed, your longevity in the market multiplies instantly. Second, you need a ritual for setting stops. Not mental stops, not I'll get out if it drops too far, but hard mechanical stops in your platform. Why? Because once you're in the trade, you're not rational anymore. You're emotional, and emotions don't respect rules. Your future self, the disciplined self, needs to protect you from your present self, the impulsive one. By placing hard stops, you automate humility. You force yourself to accept that you can be wrong, and you ensure one trade never becomes a catastrophe. Third, you need to redefine winning. Most traders define winning as profit, but that's why they burn out. They chase profit like gamblers chase jackpots. Instead, redefine a win as executing according to plan. Did you stick to your risk limit? Did you honor your stop? Did you size correctly? If yes, that's a win, even if the trade lost money. Why? Because you preserved the most important thing, your ability to take the next trade. And over dozens, hundreds, thousands of trades, that discipline compounds more than any single lucky profit ever could. Fourth, you need to practice emotional detachment. This doesn't mean becoming a robot. It means training yourself to view trades as data points, not personal judgments. Every loss is tuition. Every win is just a statistical occurrence. The more you detach from results, the easier it becomes to keep following your rules. Remember this. The casino doesn't care who wins a hand of blackjack. The house is playing the long game, and the math is always in its favor. You need to be the house. Fifth, you need accountability. The easiest person to lie to is yourself. That's why so many traders sabotage their own rules. To fix this, you need a trading journal, a brutally honest one. Write down every entry, every exit, every risk taken, and most importantly, every time you break your own rules. You'll be shocked at how quickly your patterns reveal themselves. And once you see them on paper, you can't deny them. That awareness alone will push you to do better. Now here's the deeper truth. The step most traders never even consider. You don't just need rules. You need identity. You need to see yourself as the kind of trader who survives, not the kind who gambles. Because your actions always align with your identity. If you think of yourself as a thrill seeker, you'll chase risky trades. If you think of yourself as a disciplined professional, you'll protect capital like a bodyguard. So ask yourself, what kind of trader am I? Because once you lock in that identity, the rules stop feeling restrictive and start feeling natural. And when that shift happens, something incredible unlocks. Trading no longer feels like an endless battle of fear and greed. It starts to feel like a game you can actually win, because the deck is no longer stacked against you. You're no longer part of the 90% ignoring the rule. You're part of the 10% who breathe, survive, and thrive. Let's pause here. If this message has hit you deeply, then I know you're serious about becoming part of that 10%. So do me a favor. Right now, hit the like button so this truth reaches more traders before they blow up. Drop a comment below and tell me where in the world you're watching from. I love seeing traders connect across continents, learning the same lessons together. And if you haven't already, subscribe to this channel, because this is where we go beyond strategies, beyond hype, and focus on the psychology that separates losers from winners. Because the reality is this: trading is not about predicting markets. It's about surviving markets long enough to extract your share. And the only way to survive is to obey the one rule 90% of traders ignore. Protect your downside. Guard your oxygen. Respect risk like your life depends on it. Because in trading, it does. So here's your challenge. For the next 30 days, I want you to trade differently. Before every single entry, I want you to ask, if this trade fails, will I still be alive tomorrow? If the answer is no, you don't take it. Period. No exceptions. And at the end of the 30 days, come back to this video and tell me what happened. Tell me how your account looks. Tell me how your psychology feels. I promise you this: if you follow that rule with discipline, you'll never look at trading the same way again. This is the choice that divides the 90 from the 10. Ignore the rule, and the market will teach it to you the hard way. Respect the rule, and you'll find yourself part of the rare few who not only survive, but thrive. So what's it going to be?